How's it going, everybody? It's Stas here. So we had a pretty decent day in the stock market today. The S&P broke even. The Russell went up 0.8%. The Dow went down 0.4%. But don't worry, the NASDAQ 100 went up about 0.3%. So today, we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, check out my Patreon. Link down below if you guys want my buy, sells, call outs, morning update videos, plus more, and you all could get 50 free bucks from M1 Finance, also linked down below. And with that being said, let's get right into the video. So in my video earlier today, we talked about how SPY and QQQ, both of these were trading within a wedge on the 10-day, 30-minute chart. And as of now, that's still the case. You guys can see exactly that, right? We hit all-time highs on SPY at 470 on the 5th of November, and since then we've been making lower highs, and at the same time since the end of October, early November, we've been making higher lows, right? Essentially digging ourselves deeper and deeper into this wedge, and you can see exactly that on QQQ as well, right? Let me pop it up. We hit the all-time high of 401 on the 5th of November. Since then, we've had a couple of red days in a row. 1, 2, 3 red days. And today, technically, I mean, it wasn't a red day, but still, we closed at a lower high from the high yesterday, which you guys can clearly see that. And on top of that, since the end of October, we've been making higher lows. So we're in a wedge very similar to SPY, right? So at this point in time, today very well could have been a dead cat bounce, a bull trap, whatever you want to call it, because like I just alluded to, we, yes, had a green day up 0.3%, but we still ended up closing at a lower high compared to yesterday's high. If you take a look yesterday, QQQ hit 395 in the pre-market and during the day a little bit. Today, the highest point we hit was 393, not even, right? So that's a lower high, guys, and by the looks of it, if this does not break out of the top of the wedge, we might be going down to take the lows out from yesterday. If we break under 388, 387, there could be a leg down coming up. And same thing with SPY, right? You're noticing we're trading at a lower high right now. The high point from today was 465.50. The high point from yesterday was 467.40. So we failed breaking out of the highs from yesterday, but we're also still trading above the lows. Again, hence why we're in this wedge. So we're just waiting for direction at this point in time. Is SPY going to break out above 470 again, or is it going to take out the lows from yesterday, crack under 460? Then at that point, on the 4-hour chart, we're probably going to start going to the main 180 moving average here at 450. And on QQQ, let's say we break under the wedge here on the 10-day chart, we're probably going 375, anywhere from 375, 380. So what do you guys think? Drop me a comment down below. It's an interesting time right now. We're finally seeing a bit of selling pressure, but overall, over the past month, like I said yesterday on my video, we're still up month over month in terms of the overall indexes. Sure, if you guys are in some crazy spec stocks and you don't invest in the S&P 500 or more blue chip oriented stocks, you might not be up over the past month. But me personally, and I'm sure most of you guys out there, I do invest in indexes. I do own a lot of blue chip stocks. I'm doing just fine, over the past month, regardless of this dip that we've been seeing as of late. So let me know your thoughts down below in the comments. Make sure to hit the like button as well, as it really does help me out in the YouTube algorithm. And I do appreciate each and every one of you out there tuning in, watching these videos, subscribing, hitting the like button. It really does help me out, and I really do appreciate all of you guys. So now let's talk about some stocks, right? Let's get into the meat and potatoes, what you guys have been waiting for the past 4 minutes. Number one, which just reported after hours here, let's see what they did, is Blink Charging, ticker symbol BLNK. And they actually were in my video, Blink that is. I mentioned them in my video yesterday, 3 stocks about the squeeze, and I mentioned how they've been going up as of late due to the infrastructure bill. Same with ChargePoint, Caterpillar, a bunch of other stocks. And they have a very high short interest as well, about 35%, which is unbelievable. So that is it's pretty high. And at this point in time, The stock closed at $35 and went up 8% at the close, and now after hours, it's up even more. Look at this, guys. This is it's looking like a short squeeze. From $35 at close, it hit almost $41.50, which was a move of 15%. Now we're pulling back to the mid 37s. So let's see what they did. I'm very curious, actually. They did EPS of negative 36 cents, so they lost 36 cents in the quarter versus the loss of 29 cents. And that missed the estimate there. And sales, looks like sales beat. Wow, that's a huge beat on sales. $6.4 million, which, mind you guys, this company is not that big yet. If I pull up the market cap while I tell you the earnings, we'll talk about that in a second. But they did $6.4 million in revenue versus the $4.68 million estimated, which is a huge beat. They beat that by 30%, maybe even more than that. And the market cap on this company, guys, is $1.5 billion. So you could argue, hey, it's overbought or overvalued. They only did $5 billion or $6 billion in the quarter. If you multiply that by four quarters, let's say hypothetically they did, let's just say $25 million in the year. So would you pay $1.5 billion for a company only making $25 million on the top line? I'm not going to say yes or no to that. It depends on what you think. But one would say that's overvalued. But the truth is, I'm not looking at this as a long-term investment. I'm actually looking at this more as a short-term trade. And the way it's setting up right now is pretty nice. I mean, we're breaking out of the moving averages. We have been. We're riding the moving averages. And now that we just reported those earnings, solid earnings at that, even though EPS missed, which doesn't really matter that much for a growth company. We've talked about that a lot before on this channel. But now that they reported good numbers, right? The highs from a couple of days ago just broke at about $39-$40. We traded above 41 just a couple minutes ago in the after hours. This is building momentum towards the mid-high 40s. You know, that's where I think this ultimately could get to. And I don't know when that's going to happen. I wish I knew, but with everything going on, infrastructure, high short interest, pretty good numbers, this could cause a huge short squeeze. You know, I'm not even kidding, guys. So we have to watch it, and if we dip towards the mid-30s, which we're doing now, that could end up being a nice dip buy. But as always, do your own research. Full disclosure, I'm not a financial advisor, and you guys must always understand the risks and rewards, with all these different stocks. Some are pretty risky, like Blink. Others, still risky, but not as much. There's always a risk in the stock market, but some stocks more risky than others. You know, Blink Charging, a bit more risky than Johnson & Johnson, right? But both of them will go down in a stock market crash if we see one. Not saying we will anytime soon, but just painting a picture for you guys. So keep your eyes on Blink Charging. The next one here is Airbnb. ABNB is the ticker, which, full disclosure, all you guys in my Patreon know this, I added a little position in Airbnb today, and I am down already on that position. I bought it a little bit above $196 per share. Now we're trading a little under $192 per share. And I mentioned in that post on Patreon, and I talk to you guys about this stuff all the time on YouTube as well, I don't go all in right off the bat with my swing trades. I like to buy a little bit, maybe 10, 15, 20% at first, let the stock wiggle out, let it maybe come down a bit, maybe it breaks out, I add more on the breakout, I add more on the dip, and that just gives me, it puts me in a position of, what's the way, how can I put this? It puts me in a position of power. I feel like I have the leverage if I just, inch in a little bit, buy a little bit, wait a little bit. So I'm not going all in and potentially, screwing myself over, in other words. So at this point, Airbnb selling off a bit from where I bought it, which is fine. I will be buying more in the mid 180s. If it goes lower than that, 180, 175, I'll be buying even more. I would love to build a position in the 180s, 170s, even low 190s. I think that would be a great position, entry point for me or average for me, because ultimately I think the stock is worth over $200 to 250, maybe 250s pushing it, but 220, 230, that is where I think the stock should be trading. So I'm buying Airbnb. I'm going to be holding this for a midterm swing, a couple weeks, couple months. That's the goal right now. And if it gets to my price target before that, I'll get rid of it before that. But as of now, that's what I'm doing. Alibaba is another one that's very interesting here, guys. Today it went up 2.3%, and they report earnings in 1 week from today. So next Thursday, the 18th of November, Alibaba will be reporting. And what we're noticing here is it looks like it's slowly starting to reverse, right? We broke out of the moving averages about a month ago. We ran all the way to 180, and that was in the middle towards the end of October. We ran to 180, and since then we've pulled back a bit, which makes sense, some profit taking, and now we're starting to pop again. We pulled back. We hit that 180 moving average, which was resistance, but we held it as support, and now we're bouncing up again towards 170. So I feel like if this starts gunning for mid-170s, 180s again, and we take the high out from the beginning of, actually that was towards the end of October, of 180. Let's say we break 180, this could be off to the races, I'm telling you guys. And Alibaba, full disclosure, you guys in Patreon know, I've been buying this thing. Not really recently, the past couple of weeks, but before that, when it was getting hit from 200 to 140, I bought pretty much every $10 drop I was buying. And my average right now is about 180, maybe a little bit less than 180. And I'm also noticing an inverse head and shoulder here. We have the left shoulder head, right shoulder, and we're holding the neckline at about 160 as of now. We're popping towards 170, like I said. So if this inverse head and shoulders plays out, 180, 200, Alibaba's coming for you. So keep your eyes on it. Ticker symbol BABA. But like I said with Blink, there's a lot of risk with Chinese stocks in general. So keep that in mind. Freeport-McMoRan, FCX. Let's pop it up. This is one that I called out. I forget exactly what video. I make so many videos, guys, at this point, and you know that. I can't pinpoint what video I mentioned it in, but we did call it out. I know that for sure. And I told you guys, look, if 39.40 breaks, next gap to 45 is coming. And today we broke 40. We ran up 9%, up $3.40. We closed above 40, which is a very good sign. And it seems like the ascending triangle we also called out is playing out since we squeezed above 39 into 40, now almost 41 per share. And I think, quite honestly, this rally is not it's not done yet. I think we could start pushing towards those highs from the beginning towards the middle, towards the end. Pretty much all of May we struggled at 45, 46. I think that's where this could be going. So keep your eyes on Freeport-McMoRan. Goldman Sachs GS is another one I'm looking at right now. I'm seeing an inverse head and shoulder here on the 4-hour chart. We have the left shoulder, the head, the right shoulder right here. We're holding the neckline at about $400 right now. And I like the way it's pulled back a bit from 430 to now 400. It's down about 5-6%, and it's still holding the uptrend. This is looking pretty good for just a simple dip buy. It's holding the uptrend. We hit all-time highs recently. We've seen a bit of profit taking, and now as long as this 180 SMA holds, which, mind you, has been support pretty much this whole year of 2021, as long as we hold here, I'm pretty sure this is a sure bet to go back to 410, 420 at least. And like I say all the time, nothing's guaranteed. And I shouldn't even say it's a sure bet because it's not. Nothing's a sure bet. But judging off the past, this moving average, we've bounced above it pretty much every time. So keep your eyes on GS, Goldman Sachs. Google is another one that I'm looking at now as it's slowly trading down about $100 per share from the recent all-time highs. If you guys look here on this chart, we hit $3,000, which is a huge milestone for Google. And now that I'm looking at it, this stock was just $2,000 back in March, so it ran a whole 1,000. And full disclosure, you guys know I'm long Google. It's my favorite stock for the long term, and I've been buying it. I even bought some after they reported earnings. People call me crazy. Oh, Stas, you're buying at the top. What are you doing? I bought some at 2,900. I ran a 3,000. Not saying, oh, look at me, I gained $100 because I didn't sell anything. But still, this is one of those stocks that I really feel like, even if they are near all-time highs, reporting great numbers, I could still buy it and feel comfortable and sleep well at night, if I'm buying a little bit here and there, which I do with Google. So at this point, now that it's getting down $100, if it starts going 28.50, 2700s again, I'll probably slowly start adding a little bit more Google again. And my average cost at this point is right around 2,000, maybe a little bit higher than 2,000. And this is a stock that I believe, when did I start buying Google? I think I started buying Google aggressively. I think it was like 1,300. Maybe 1,500. Now I've just been averaging up, hence why my average cost is over 2,000 and right around a little bit over 2,000, probably 2,050, maybe 2,100. So I'm gonna add a little bit more potentially if it starts coming down, maybe another $100-$200, especially if it starts going, 24, 5, 600. I'll be buying more there. So that's Google stock. It's looking pretty decent here, even for a short-term trade, especially as like Goldman Sachs, this one has excuse me, guys, been riding the moving averages. So watch out for Google. The next one here is, drum roll please, MAR. You guys know MAR is Marriott. Let me take a sip of water real quick. Stay hydrated, guys. Marriott, MAR. This one has taken a beating recently, and before that, it was ripping, and technically it's still ripping. It's still above the main moving average here, and it's still, reversing out of the downtrend that it was in pretty much from, March all throughout the beginning of September. It was actually under the moving averages during those time periods, during that time period. And at this point, we're still breaking out. Like I said, middle of September is when we went from 140 to 170. Now we're down to 157. Profit taking, simple pullback. That is what I'm seeing as we're now down about 8%. So I think if we hold the 180 SMA at about 150 here on this 4-hour chart, which is very possible, I think buyers are going to step in 150, 55, even 160. So these next couple of days, tomorrow being Friday, next week as well, we're going to have to watch Marriott on this dip. They reported earnings. I forget, were the earnings all right? I think the earnings were okay. Pretty decent. They reported a profit from what I'm seeing here. So Marriott, watch the dip. That's simple. That's what I'm doing at least. So that's pretty much it, guys. I don't want to hold you all too much longer. We talked about Blink, Airbnb, Alibaba, Freeport-McMoRan, Goldman Sachs, Google, and of course, what we just talked about, Marriott. And there's a bunch of other stocks I'm looking at, guys. DraftKings, I've been waiting for that one to reverse. I recently bought more DraftKings. I'm in that one in the mid-40s, roughly, is my average cost. So I'm riding DraftKings right now. What else am I riding? I forget. I should know this. I mean, what the heck? But you guys know. The markets, they're crazy, especially in these days that we're living in. So that's it. I'll wrap it up here. If you guys enjoyed the video, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon if you want all my buys, all my sells, all my call outs, everything I'm doing, from selling covered calls, trades, long-term investments, plus you get morning videos. All of that is on Patreon, link down below, or you can go to StockSurfest.com/Patreon. And don't forget to also get your $50 from M1 Finance and your 2 stocks from Webull up to $1,600. All you have to do is literally deposit $100 into M1 Finance and into Webull, so $200, and you literally make back close to $100 from putting in your 200, and then you take your 200 out if you don't like M1 or Webull, which for me, I love M1. Webull, it's all right, but I still, who doesn't like free money? And if you don't like the platforms, just take your money out, keep your free money, boom. So those are linked down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.